What's up, guys? Welcome back to the channel. My name is John and this is John Paul Investing. First of all, I want to congratulate the 5 winners that we selected in the giveaway. The 5 of them did win $100 each, and I wanted to say thank you to everyone who did participate. If you did not win, do not be discouraged because we will be hosting more giveaways in the future. Now today I wanted to talk about Senseonics, but not only Senseonics, I wanted to talk about the general market, how we saw a very steep dip in price across a variety of stocks, and the fact that the stocks did end up picking back up. I saw it as market makers were manipulating the market again to try and stop as many investors out of their positions, so that way they could get them cheaper, and we could see that because prices did recover almost immediately. But before I got into the video, guys, go ahead and hit that like and subscribe button, because this way you can get notified when I make videos just like this one, and it's a way for you to show your support for the channel. If you would like access to our private Discord community of over 150 investors and know exactly when I buy and sell specific stocks that we talk about here on this channel, I highly recommend you check out the link in the description to the Patreon group. I actually ended up putting $8,000 in a particular company that is pretty much overlooked right now, and I think it is going to do very well in the very near future. So if you want to see what I bought recently, go ahead and check out the link in the description. Lastly, if you would like up to 2 free stocks, all you have to do is open an account with WeBull using the other link in the description, deposit $100, and then you will get your 2 free stocks. You can then sell these stocks and then do whatever you want with that money. It essentially is risk-free money, guys. So before we got into Senseonics stock technicals, I did want to give you guys an update on the performance of our position that we opened up a little bit before last week. So we averaged in close to $2.55. And at the time of the first recording, whenever I did share with you guys that we opened a position back on our Patreon group, that we were already up 10%. And this is before we did a little bit more research and figured out that this company was going to be a very prosperous company if they can get that FDA approval. And it is likely that they do get it. And since we've discovered all of this, the market has been voting on Senseonics at astronomical rates, and we are already up 53% on our position in Senseonics. And we are confident that this stock has a lot of room to run. If they are to take market share from Dexcom, this is easily going to be a $30 plus stock in the future. And these are very conservative figures, guys. So as we see here, guys, above $4, I think what happened in the markets is a lot of investors were starting to take long positions above $4. And I think what ended up happening in Senseonics and a variety of other positions, market makers knew that this was happening. So it made a lot of sense to force price down below these levels, because what do investors do when they take long positions? They like to set stop loss orders. And where does the textbook usually teach you to place stop loss orders? Well, below your support line. And below $4 is the major support line that we were looking at. And I think that in the order books, there was a ton of liquidity below this level of $4. And the market knew that, especially because it traded sideways for, a full 2 days. And I think that was enough to basically pull a lot of money above $4 to then stop them out below $4. And then as you can see, this kind of pans out. The market came below $4 down to pretty much $3.50 from a high of $4.25 down to $3.50, or close to 20%. I think it shook a lot of people out of the market again, and we have since traded back above $4, and it looks like that I have a tingly feeling that this is going to prime the market to keep running higher and higher. Now, this was not the only company that experienced this. Just the other day, I was talking about Nano Dimension and this other company that I briefly talked about called Kubient. And Kubient, I think the same exact thing happened. As you can see here, we gapped up probably, close to 50 cents beyond $7. And we were trading above $7 for a good maybe day and a half, 2 days. And the market looked like it wanted to go beyond $7.80, possibly beyond $8. And it pulled back and more than likely stopped anyone out who put stop loss orders below the support line of around $7. And then what happens? It captures this liquidity or money and then pulls all of that money back up a lot higher than it was previously. And now if you had your stop loss order, then you essentially have to chase this position back, hoping that you can get it at a good price. And you're basically going to dilute yourself out of your original position if you do decide to buy back. And it sucks because now you're stuck wondering, okay, should I wait for this to pull back, or what if it keeps running and then I chase it? It would have been a lot easier to just not set your stop loss and to, just let the market breathe how it needs to right now, especially in this macro environment that we're in, and just give your positions room to run. They're not just going to run straight up. They have to pull back. I keep telling you guys, you want markets to move sideways. You want to see good moves on the upside, but then you want to see them be followed by pullbacks. This lets the short-term traders get out, and it lets them, it primes the market to move higher in the long term. It's healthy for a stock to run and then pull back, guys. And lastly, guys, let's look at our beloved Nano Dimension, because I think the exact same thing happened. We bounced on support here at around $15.70. We ran up close to $17 as we expected, approaching our previous resistance, and we came back down and pretty much plummeted in price back below this level of around $15.70. So below this previous low is where we breached, captured all this liquidity right here based on this candlestick right here, and we have since traded back above this $15.70 range. And I think this is exactly what we needed in order to prime the market to go higher. Guys, I'm still incredibly bullish on the market right now. It is simply shaking out weak hands right now. There is no reason for the market to continue on a downtrend, especially in the macroeconomic environment that we are experiencing right now, with the Treasury printing money like crazy and interest rates still being at record lows, and there's no sign of those record low interest rates to be risen anytime soon, let alone stimulus talks that we just got from the Biden administration. But anyways, guys, that is it for this video. Just wanted to let you guys know to not be worried about a market crash, because I do not think that this is the time to be worried about a market crash. This is simply a correction that we needed in order to push markets up higher than they are right now. But anyways, guys, if you liked what you're watching, please go ahead and hit that like button. And while you're down there, go ahead and hit that big red subscribe button. And don't forget to hit the bell notification to get notified when I make videos just like this one. Thank you guys so much for watching, and I will see you in the next video.